Welcome to the Wealth Factor, your go-to destination for all things finance and investing. We are a team of experts, including certified financial planners and investment professionals dedicated to delivering high-quality content that is both informative and easy to understand. First, let's talk about the different types of investments available. Stocks, bonds, real estate, and mutual funds are just a few examples. Each has its own set of risks and rewards, and it's important to understand the differences before you start investing. Stocks represent ownership in a company and can provide the potential for high returns, but they also come with the risk of losing money. Bonds, on the other hand, are loans to companies or governments, and they typically provide a lower return but with less risk. Real estate can be a great investment, but it also requires a significant amount of capital and can be time-consuming to manage. Mutual funds are a type of investment that pools money from many investors to buy a diversified portfolio of stocks, bonds, and other securities. By investing in a mutual fund, you can gain diversified exposure to the market without diversified portfolio of stocks, bonds, and other securities. By investing in a mutual fund, you can gain diversified exposure to the market without having to buy individual stocks or bonds. Diversification is the practice of spreading your money across different types of investments to reduce risk. A diversified portfolio can help protect your money in case one investment performs poorly. Diversification doesn't guarantee a profit or protect against loss, but it can help mitigate the impact of a poor-performing investment on your overall portfolio. By investing in different types of assets such as stocks, bonds, real estate, and mutual funds, you can spread the risk and increase the chances of achieving your investment goals. Additionally, diversifying geographically and by sectors can also be helpful in reducing risk. Now, let's talk about setting investment goals and creating a plan. Before you start investing, it's important to know what you want to achieve and how you're going to get there. Whether it's saving for retirement, buying a house, or funding your child's education, having a clear goal in mind will help you stay focused and motivated. Once you have set your goals, you can create a plan to achieve them. This plan should include a budget, an investment strategy, and a timeline. It's also important to review your plan regularly and make adjustments as needed. And that's it for today's video on the basics of investing. Remember, investing can be a powerful tool for achieving financial success, but it's important to understand the basics before you start. Stay tuned for more videos on finance and investing, and don't forget to subscribe to our channel, The Wealth Factor, for more valuable content.